Top of the morning to you traders. This is Chris Buss with Traders Profit Compass with your morning look at markets for Wednesday, April 21st. Taking a quick look at futures. Oil down 1%. SPY and NASDAQ futures are flat. Small caps are up 0.6%. Gold is flat. Silver and copper are both up about 0.7%. Looking ahead to earnings today, we've got ASML in the semiconductor space. We've got Nextera Energy, LRCX, another semi name, Chipotle this afternoon, Las Vegas Sands this afternoon, and Spirit Airlines this afternoon. There's also some other pretty good names in that bunch. You'll see those on the calendar on the website, and you can always go to earningswhispers.com. That's a good place to see all the names. But before we get into the charts, I want to thank those that sent me their goodwill wishes, get well soon wishes yesterday. I was feeling a little bit under the weather, having had the second COVID shot on Monday. You know, I did fine. I had the shot 9 a.m. Monday morning and felt good the whole day until about 12 hours later, 9 o'clock at night, and I started to go down. And then yesterday, I mean, nothing major, but more than wanting to sit at your desk all day and watch charts and all that. So I appreciate that. I feel a lot better today and ready to dive back into it. So we had a little excitement yesterday in terms of some corrective activity. Felt like kind of a risk-off day. Here on the 2-hour chart, we can see that price filled this gap and has pretty much held the line here at 412. I've added this trend line off of this low here back in March that comes in this 407 area. We do have support levels above at 409 and 407, but what the bulls would really need to see is start seeing these levels get recaptured above. That's always a bullish sign. But as it stands now, it looks like, you know, there's probably a little bit more to go, I'd say, on the downside. If we look at the 30-minute chart, what did I do? I know how to fix it here. Hold on. Sorry about that. I just clicked on the... Here we go. Back on the 30-minute chart for the zoom in, you can see the opening candles were flushed down to fill this gap. And then we overshot it and came down to this support level that I had already had on the charts at 1050. Bounced up, came back and revisited that 1050 level again, and has since bounced. I did put a downtrend line on these candles. I think for today, a break of 410.50 would likely bring in more sellers. I mean, to me, this looks like a flat flag. Now, if price starts to move up here, that's going to invalidate it, you know, up into the 413s, 414s. But I wouldn't be too anxious here in open space to get long. I think you've got to have an objective level to shoot against. So if price came in to 411 or 410.50, that could be a place where you could get long with a stop just below and see if you get a bounce. But if you lose 410.50, I think it's gonna head lower. Looking at the Qs, same kind of a look. We had an impulsive bar. I guess that was Monday. Then we had a little flag. Then another big bar to fill this gap completely, and then another little flag. I've put in a uptrend line off of the March low that comes in here around, let's call it 326 at the top of this gap. Looking at the 30-minute chart, very much the same idea with a move down, a consolidation flag, and now back testing this breakdown level at around 337. So here you can tell 335 is your line in the sand. Any kind of pullback into 335 that holds, you can have an objective long there. That is going to be support, and until it's broken. But if you lose support at 335, then your next move is going to be down to test the top of the gap, and then to potentially fill it down here to 331.62, and then below that 330. So we've got some very distinct levels here. I'm going to leave this filled gap on the charts for now, because those would be upside targets for us today if there's a move back up. And I think you would run into trouble, or the first significant amount of trouble, overhead resistance, would be here at 339 at the top of the gap. So have those levels marked, be ready to trade in and around them as we always do. IWM, this is the 2-hour chart. We had this consolidation triangle that you see here in brown. We had the breakout that was capped here at 225.50, and then it just let go, slicing through these support levels and then right down to the bottom of the triangle where it has found support. So what's happening is doubt has been creeping into the reflation reopening trade. All the airlines, the banks, the travel companies, all those names that are embedded into the IWM index have not been doing well over the last couple of weeks. And you see this big underperformance here relative to SPY and the Qs. So for today, if you get a bounce off of this trend line up into 218 and then 219, I think 219 will be a place where it will have trouble. Support, 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 broken support now becomes resistance. So I think that's going to be a hard level to get through. And then you've got the downtrend line right above it. So those are two locations where you may want to reverse your bounce trade and then, back into a fade. But you can see the triangle narrowing. So we may get, a couple more zigzags as the price finds its way to the apex of the triangle. And then once it definitively breaks one way or the other, we'll either have, a monster breakout or a bad breakdown. Now, I think on the downside, if you lose 215, I think you're coming into 212 pretty quick, and then 209 pretty quick as well. You can see those were prior lows down at 209, and I wouldn't be surprised if this breaks in the next day or two, if we go down to revalidate these lows. IWM 30-minute chart, what I did here was I put on the Fibonacci retracements from the start of the move to the bottom of the move. And so now, as price bounces, you can see where the Fibonacci's align with technical resistance. And so they don't line up perfectly, but I think, as we just discussed, right here at 219, you would have a 618 retracement here, and then you'd run into this technical resistance that has shown up before. And I think that would, because IWM has been weak, I think it's going to have a tough time getting through that. Facebook, we had a breakout back here at 305, then we took out 310, spent some time. They dropped back down. This is the area where we tried to get long, and we got a push back up to resistance, but it has since failed. So now we're printing lower highs and lower lows. I think for the bulls, you got to see something reclaimed to get out of this little downtrend channel we got working here. What would do that would be a break above 305, recapture this prior high from the daily chart, and then again, you could camp out in a long position and then look for 310 to be taken out and then move on to higher highs. But until that happens, I think you've got to lean to the bearish side. I mean, it has proven, here it was in question. We thought this could break out, but it didn't. So now we've got, a downtrend line, lower and lower highs, lower and lower lows. And so if 297.50 were to fail, then that's going to bring in more sellers and possibly even take you down here into the 290 area. So keep that on the radar. Apple, they sold the Apple event yesterday, came down and filled this gap and then bounced up again. I think your pivot today is 133. And then on a recapture of 134, I think you can be long. But if it drops below 133, I think you're going to go back to test this 132. And if 132 fails, I think you're going to go ahead and fill this gap and probably even get down to this 130.50 level. Tesla, we had the big move out of this flag all the way up to 780, 790. We came in for the halfback touch at 725. It failed. Came into 710, which held. And so now price is trapped between 725 and 710. For me, I wouldn't be interested in trying to trade that $15. What I will be looking for, though, is a breakout above 720 that holds. You could get long and look for a move back up towards the highs at 780. Or if 710 fails, I think you're going to come back to 670, which was this line of consolidation that goes way back in the charts. And then that would be, you couldn't even dispute it at that point. It would be a failed breakout. So 725 and 710 are your key levels. Microsoft, not much of a pullback. You can see it sitting right on the top of this gap. So the top of the gap is your pivot. You can stay long against it, but if you move below, you're going to come down here to 256 pretty quickly. If that breaks, then 254 would be your downside target. On a break above 259, then you're back up towards the highs in blue sky territory. Amazon, we've been looking for a weekly close above 3,400 for a intermediate term to long-term buy. We're not there yet. Price has pulled back, trading just below the 33.50 pivot. So using our free 50 club rules, above 33.50 is a long, and you're looking for 3,400. But while it's below 33.50, you're looking for 3,300. And I mean, to me, this looks like a little bear flag. I wouldn't be surprised at all if we came down here to 3,300 or even made a quick move to fill this gap, then reverse it. So be aware of that gap and, use your levels, use your $50 increments to trade either long or short if you're active in Amazon. Google, doing what it needs to do, holding this uptrend line, holding lateral support at 2270. I think you stay long here against 2270. If you break below, then you could come back to 2240 and possibly 2230. So still looks pretty good. I mean, we do have the bearish divergence, higher highs, lower lows on momentum, lower lows on RSI. That's not a sell signal, that's a warning. So if you see price start to roll over, these would be confirming signals that corrective activity is pretty likely. Now Netflix gave everyone a reminder after hours last night that earnings risk is real. They pulled the rug and dropped it down $60, $80, something like that. Came down here into 485, and I looked pre-markets trading around 505. So that's going to create a bracket trade setup, right? We're going to bracket the price action today, and then above the bracket will be an opportunity to fill the gap, and below the bracket will be an opportunity to come back down to support at 470. So if you want to trade that today, you're just going to have to use that opening range as your guide and make a determination if you think it's going to break higher or lower. I'm not going to trade it today. I'm going to let this thing settle out. I want it to build, a range here first, and then on the second day, look for breaks outside the range. I think personally, and this is just a pure guess, I think it's going to come down to 470, and then that would give a great trade location to try for a long. And I don't think it just drops down here in the middle of the range and stops. I think they find a way to test the lows at 470, and then I think you'll have a lot of buyers step in at 470, and that would be a really very objective long trade location. We have been watching cannabis. This was actually a trade idea recently, and we had put in this support line at 39.50, 40, 39.50 to 40, And yesterday we had an impulsive candle that broke below. And you can see here, a lot of thin air. A lot of thin air. So from a strictly technical posture, the chart is definitely bearish. And unless and until price can reclaim 40, I say it goes lower. Now, what you could see is, another down day, but then come back to retest, that back test. It's the exact opposite of a breakout where you break out and then back test it. Here you're going to have a breakdown with a possible back test. The hard thing is that those back tests are hard to predict. So if you're just waiting, okay, I'll short it at 40, you may never get it because the red bars may just proceed from here, taking it lower. So I like this one short against 40 with this big air gap down below. I think you could safely put your first target at, say, 36, and then after that, see where it goes. XOP was another one just the other day, I believe it was Monday, where we had marked this 76, and I told you to set an alarm there. Well, we got the breakdown. I think we find 70 as a first target, and then if oil falls apart more, then you're going to come in here to the 200 at 67, and then another downside target would be towards 57. So depending on what oil does, I think this heads lower. The only thing that would change my mind is if price recovered 76 and then broke this downtrend line. So I hope some of you got that trade yesterday. That would have been a good one. SMH has also been in our crosshairs lately, and I wanted to follow up on that. We had set some alarms for a topside breakout, and obviously that didn't happen. It went the other way, and we had this 249 marked as support, and we also had this big gap below. And so what happened was a lot of momentum on the sell bar the other day, and once we went into the gap, then the gap filled quickly. We got a Fibonacci bounce, and then we're back down in support at 242. And so remember, that was our level that we broke out from, and that's where we bought for this move. Remember that? We had been watching 242, then we bought it, and we got this really quick move, which was a nice trade. So now, semi's got to hold the line. I mean, it's just as simple as that, because, excuse me, below 242, you're back in this trading range, and I could see 236 coming in real fast. So set some alarms here at yesterday's lows. Just call it 242. And if you break below that, I like the idea of getting short and looking for 236 right there. I want to bring your focus back into bonds. As you'll recall, I got short bonds against this declining 50-day EMA. It's currently at 140.50. And so my stop is at this Fibonacci level, 140.81. So I'm still short. What I need to see to feel good about the trade is a break below 138. I think if that happens, come down in here to 135. And anything above the 50, this could open up a move towards 143, 147 area on these Fibonacci retracements. And so if that were to happen, well, I would exit my short. That would be a catalyst for gold. That would be a catalyst for the reflation. Excuse me. That would be a headwind for the reflation trade with yields falling, and that would be a headwind for regional banks, right? Yields falling, regional banks would have lower interest rates, and then, you know, there would be more downside on those. So keep an eye on TLT for either a break above this 140.81, which would portend further upside in TLT or downside in yields, however you want to look at it, or a move down below 138, which would mean higher yields, good for banks, good for reflation, and probably good for IWM. Gold had this double bottom move in March, been grinding higher. Now we're just below the downtrend line in the 200. We really need to see a pop above 168, let's call it, and that would open the door for 171 and 174. So gold still looks good, but we are at dual resistance of the downtrend line and the 200. Quick look at the gold miner ETF. You can see that the miners are outperforming gold, which is what you'd expect. Here, price has already taken out the 200 and has already taken out this large volume over price resistance. I think, you know, if you wanted to get long here, you could get long against, say, the bottom of this candle at 35.50. And I think the upside is going to be in this 37.50 to 39.50 range. And then, you know, if it breaks out from there, it's gone. You know that we're in some individual names. Kirkland Lake, Rand Gold was a name that we called out. Wheaton Precious, you know, some silver miners. Those all look good. So now it's all about follow through. Can these, you know, continue to break out and move higher? And wrapping up here with our last slide, KRE, all of the regional banks are going to be reporting, I think even starting this week. Yesterday was a bad day at the office, down 4% and testing this 50. If you see 64 break, I think that's a short. You know, you'd be below the 50 and you'd be below this lateral ledge of support. I think you could very easily see, you know, 57 down here, especially if you see yields fall. The banks will not like that. So I think this is setting up. You certainly got a pivot point here at 64. And, you know, if you want to stay long against that, that's an objective long. But then you really need to see 68 taken out to get back on track for a continued move higher. So key off is 64. And let's see what happens, you know, today and tomorrow at that level. And then we'll know if we've got a trade or not. So um, I hope you like the analysis. If you're new to the channel, please hit the subscribe button and the alarm bell so you won't miss any of my content. And certainly jump over to the show notes where you can register for all my content, get an invite to the trading room. We'd love to have you there. Longtime listeners, I really appreciate you continuing to support my efforts. I hope the levels and the commentary are helping you make better trades more often. I think if you really concentrate on the levels that I give you and focus on your execution around those levels, I think that will be a path of success for you. And if you ever get stuck, you know where to find me. I'm more than happy to help, and have done so with other traders. So don't be bashful. So let's see how we do today. Let's see if that Netflix result becomes a drag on the Qs, and let's see how we do. And have a good day of trading, and talk to you next time.